All right, let's get into it. Today, we are diving headfirst into the data revolution that's totally reshaping finance. We're talking about moving way beyond the usual spreadsheets and official reports and into this powerful, kind of wild new world of information.
You know, for decades, investors have lived and died by things like quarterly earnings, those big annual reports, economic releases, you know the drill. But let's be real. In a world of instant everything, the big question is, can these slow, traditional snapshots really give you an edge anymore?
So think about it like this. On one side, you've got the classics, right? The balance sheets, the income statements. They're structured, they're predictable, and hey, they're available to everyone at the exact same time. But then, on the other side, you have this new frontier. We're talking satellite feeds that are literally tracking oil tankers. We're talking social media sentiment, geolocation data showing how many people are walking into a store. It's really the difference between a posed formal portrait and a live chaotic video feed.
So to really get a handle on this shift, we kind of have to rethink what data even means in the first place. And there's a really great analogy for this. It's all about seeing faces versus seeing pixels.
This right here is what perfectly captures the power of machine learning. See, you or I, we can look at a face and see the big features. You know, the eyes, the nose, the mouth. But an algorithm, it can see every single pixel, every tiny, seemingly random detail. And that's the key. It can find patterns in that super granular atomic level data that are just completely invisible to us when we're looking at the big, smoothed out picture of a financial statement.
Okay, so we hear the term big data thrown around all the time, right? But what does big really mean, especially when we're talking about finance? Well, it turns out it's about a lot more than just size. It's actually defined by 4 key characteristics, what we call the 4 V's.
So at its absolute core, big data is basically any data set that just breaks our traditional tools. I mean, if you can't just pop it into a standard relational database and run a simple query, something many of you are probably familiar with, then yeah, you're almost certainly dealing with big data.
And these are the 4 pillars: volume, variety, velocity, and veracity. So let's quickly break down what each one of these really means for an investor.
First up is volume. And yeah, this is the one everyone thinks of. We're talking about a scale of data that's just mind-boggling. I mean, terabytes, petabytes of market data, of satellite imagery, it's huge. And the first massive challenge is just, where do you even put it all? How do you access it efficiently? Next, we've got variety. And this is a massive departure from the clean, perfectly organized numbers you'd find on a balance sheet. Now we're dealing with this messy mix of news articles, social media posts, pictures, raw web content. It's truly the Wild West of information, and the job is to somehow wrangle all of it into something that actually makes sense.
Okay, then there's velocity. So this data isn't just big, it's incredibly fast. It is being generated in real time. Think market tick data, breaking news alerts. And here's the kicker: any advantage it might give you can disappear in a matter of minutes or even seconds. So it has to be analyzed just as fast as it comes in to be of any use at all.
And last but not least, veracity. Now this might just be the biggest hurdle of all. It all boils down to a simple question: can you trust the data? Because it's often noisy, it's incomplete, and sometimes it's even designed to be actively misleading. So cleaning it, validating it, that's a monumental task.
I mean, just think about Twitter for a second. It's a perfect example. You have countless accounts out there that might be actively trying to spread disinformation, trying to pump up a stock or spread rumors. The real challenge is trying to separate that noise from a genuine signal. It's incredibly difficult.
Okay, so that's big data in a nutshell. But then you hear this other term getting tossed around a lot: alternative data. So what's the deal? Are they the same thing? Well, not exactly. Let's clear this up.
So here's the key distinction. Alternative data is defined by its source, not necessarily its size. We're talking about any information that comes from outside the traditional financial world of stock exchanges and official company filings.
And this brings us to a really, really important point. Alternative is not always big, and big is not always alternative. It sounds a little confusing, but think of it this way. A small, very specific data set of shipping manifests, that's alternative. But decades and decades of stock market tick data, that's definitely big, but it's totally traditional. See the difference?
And just look at the sheer variety here. It's incredible. You've got location data from our phones that can track foot traffic in retail stores. You've got ESG data that scores a company on its environmental impact. You even have data coming from the Internet of Things, like sensors on factory equipment that can predict when they're going to need maintenance. The sources are just unbelievably diverse.
Okay, so we've defined our terms, we know what big data is, we know what alternative data is, but now we get to the most important part, the so what. Why does any of this actually matter? What's the strategic advantage here?
Yeah, let's just cut to the chase. In a market where literally everyone gets the same official reports at the same time, how does this new, kind of messy data actually give an investor a real edge?
It really all comes down to one thing: seeing what's happening before it becomes common knowledge. It's about being able to use satellite imagery to get a sense of crop yields before the government report comes out. It's about analyzing web traffic to predict quarterly sales before the company's earnings call. This is how you gain that unique information edge, discover non-obvious patterns, and ultimately improve your forecasts and manage risk better.
And look, this isn't just some fringe theory. If you want to know if it's real, just follow the money. This chart right here shows that global spending on alternative data by investment managers isn't just growing, it's absolutely exploding. That's a huge signal that the industry is betting big on this being the future.
I mean, think about this number. By 2020, spending was projected to blow past $7 billion. You have to understand that is not a niche trend. That is a fundamental, ground-up transformation in how investment research is done, period.
So that leaves us with a really big question to think about. In a world where data is just gushing from every device, every transaction, every single interaction, the race is definitely on. The old signals are becoming common knowledge. So the real question is, what new, what unconventional source of data is going to become the defining investment signal of tomorrow?
Hey, if you found this explainer useful, do us a favor and hit that like button, share it with someone who might be interested, and of course, subscribe for more breakdowns like this one. Thanks so much for tuning in.